When you start adjusting them for inflation, making sure that money is really outpacing when you have your savings there and also your investment there. Now, when we start thinking why investing might be better than savings, this is again one of the big things that people have to look at. When you look at putting money in a traditional savings account, they are paying usually sub 1%. So every single dollar you're keeping in there, like we were talking about, is being eaten up due to inflation. If you're keeping it in there, you are going to lose out to inflation. This is where, of course, the emergency fund comes in. When you start looking at saving that 3 to 6 months of that emergency fund, it is imperative that it is invested into those high yield accounts, or essentially you're getting or beating out inflation at least a little bit while you're still keeping some of that money completely liquid. It offers a smaller amount of interest. You're not going to get the same growth and see the same diversification that you're investing in the stock market, but it offers higher return that can outpace inflation, meaning your money is actually going to grow into more money. Money creates money. If you've ever heard that, it is absolutely true. And we can see it as the stock market does increase in value. Now, of course, long-term growth. When we start thinking about long-term, we're looking at paying for, let's say, child's education. We're looking at retirement planning. There's going to be a point in time, trust me, there's going to be a point where you no longer want to work when you get ready to retire. Now, for retirement planning, it is going to mean something completely different for everybody. For me, might be able to generate $5,000 a month and be perfectly good because we don't have any bills. For other people, you might need a lot more money. And it also does make a difference. What kind of retirement do you want? Do you want one where you can openly, freely not worry about money, that you want to travel on a regular basis, that are things, you've always wanted on that bucket list? Having the funds and having the ability to do that comes from the investing side. Now, of course, to do this, what I'm doing personally is passive income. When you look at certain investments like dividend paying stocks, when you look at real estate, even looking at bonds, you can generate a steady stream of income. So you could get to the point where you're generating as much as you are earning as a regular paycheck working your 9 to 5 job, or even going above and beyond because of that compounding interest rate or that compounding effect that we have in investment accounts. You can actually get to the point where you're replacing a majority of your income with the passive income in dividends.